Hey gang, welcome to Dr. Frank's Finance World. I am Dr. Frank the Bank, where I try to teach you a little something about finance and hopefully put more money in the bank for you. So anyway, the last part that we're going to talk about today is Bollinger Bands at least, is Bollinger Bands Part 4 here. And please be sure to just subscribe or do notifications if you want these in the future. Look in the notes for links and websites. We do that at the end of each video as well. And check out the books and the links to essentially a bookstore of books that are my favorites when it comes to Amazon out there and each of these topic areas. So the thing about Bollinger Bands I've learned through time is they're useful in many areas. They're pretty good at day trading. I had teams of students that did that at the last school I was at. I've used them and I still use them with mutual funds. That's how I have a positive return here in 2022 overall for my mutual fund money that I have through Colorado State. It actually works with bonds, I use as a strategy I use for options. When we get to the derivatives part, I'll show you what I do that. Futures, exchange traded funds, almost any type of security. So I've shown this to you before. This is a major index. Once again, it's actually an ETF on the major index, but you can see that essentially it was telling you to sell over here, and it was definitely telling you to buy right in this range right here. And ultimately, it didn't quite get to a sell there. It finally got back to a sell over here, which got you back to about break even. And then you bought down here and you'd still be holding it from down here, and you made a little bit of money. But people who were in this index lost 20% over the course of the year, while you would have actually, because actually here is the November of last year when you're over in this region over here, and it's down 20%, 15, 20%. So you would have made about 7%. So there you go. It can be somewhat helpful. I finally, here it is. This is the big stock part of the announcement here. We're going to be doing a couple of meme stocks next. Got a lot of requests for that. And there are two ways that you can do the meme stocks, exactly like I do my regular stocks or my day trading. I think the reason why people like meme stocks and triple ETFs and some of that type stuff for this trading is you're looking at large moves during the day. I mean, I know that there's not a lot of trading costs out there anymore, but the reality is if you can't get something in a day trading sense that moves at least 2 or 3% over the course of a day or two, I mean, you don't want to hold the stock forever and be on the hook for news out there that might hurt you. So at least not leverage positions. But at any rate, there's two ways of doing it, regular or the day trading out there. And let's take a look at both. So this is kind of the surprise to many of you probably, because this is meme stock for long-term trading out there. And this goes out for 13 months like I've done everything else. And yes, it would have told you to buy here. That's buy number one. And it would have told you to buy here. Let's see, right in this area, you can see that that was another relative strength and it was down. We bought first at about 1850. This would have been down around 14, so you would have bought here. And then you would have bought again when it got down into this range. And essentially you had a $9.50, a $14, and an $18 price, which, in the end, when you got the sell signal over here, you made a little bit of money off this one. You made a lot more money off of that one, and you doubled your money off of this one. And yes, you held it from December until the end of March, but which I know some of the memers out there wouldn't want to do that. But the reality is you would have made really good money on your money, probably in the neighborhood of 50 or 60%. It would have also told you on the long term to buy it down here when it was about 675, and you would have sold that when it went up to about 15 up here when you made about 130% on your money, and you haven't gotten in since. So that's what the long-term trade can do. You would have done very well over the course of the last year, more than, honestly, probably more than 200% on your money. No guarantees on that, though. It's just looking at past results. So here you also have a day trading version of it. If you could see, and I don't think I put it on here for you, this is over 19 days. And if you come up and look, now I'm using 15-minute, I'm using a 15-minute relative strengths right there. Bollinger Bands as the time period, not days. And I'm still using 30 15-minute periods, and I'm still looking for 2 standard deviations. But in this model right here, you would have bought right about there, which would have been at about 690. and you would have probably, so you might have sold there, I'm not sure, but you would have definitely sold here. So somewhere between 750 and $8 you would have sold it in this region as well. You would have bought it again here at about 680, and you would have bought it again down here at about 580, and you would have sold out once again here at 650 and made some money on your money there as well. You would have bought down here at 610. You would have sold out again at 660 and made about 8 or 9% on your money there, and so forth, and might have actually shorted it here. We'll talk about that later, but the bottom line is, over the course of 19 days, you would have done very, very well. 30, 40, 50% return on your money. So, this isn't a guaranteed stuff. The whole idea, like I said before, is to try to give you an idea when the market is overly happy or overly unhappy with a stock or an index or whatever. So this is just some thought process, I think, for many people that trade in meme type stocks. They're just waiting for somebody to tell them, when does the next person announce it on what website, and then I get in and I get out and so forth. But the reality is there is a mathematical structure way to at least get a little bit of help in the timing of that trading, and that would be technical analysis. So there are trend lines up and down markets when the market melts up and melts down. When it melts up, we change our strategy. Like I said, essentially, we changed our strategy in 2021, when we actually went to, when it would bounce off of the midpoint, we would buy, and when it got above, we would sell, and when it hit the midpoint, we'd buy, and when it got above, we sell. And that's how we traded in 2021 to try to make some money. But that's the time you're less likely. This is really the time you're more likely actually to underperform in Bollinger Bands. When it goes down, that's why the triple buy on the way down kind of protects you. You tend to walk away relatively unscathed, as opposed to the other person who's buying and holding probably down 20 to 40%. So looking at a U.S. retailer, once again, a major one, use stock charts. We can see here sort of a similar pattern. You bought down here, and you probably would have thought pretty hard about it there, but even if you didn't, you would have bought there, and you would have bought there when it went down again, probably right there. And then when it went above over here and sold, you would have broke even on that money. You would have lost money on, where was the first buy? I guess it depends on whether you sold it. You lost money on this one, and then this one down here you would have made money on. And overall, gotten pretty close to break even, while in this major retailer out here, 13 months later, they went from 170 to 120. And they were down a stellar 30%. Not uncommon for 2022, by the way. So it does work for different securities. It was to work a little different based on who I think is involved. I think it is related to the different parties that are trading in it. At different points in time, melting up particularly is when it won't do as well. Overall, after doing this for probably 15 years plus, my long-term success rate shows that I beat buy and hold on most securities 85% of the time within 1 year, 90% of the time within 2 years. 93% of the time within 5 years. Looks like we lost the camera, no big deal. So books, you see the previous one. If you go to this research one, you'll have to look it up yourself here, but I can show you what it looks like on the screen if we escape out of here. This is what the research looks like. This is talking about the optimization of Bollinger Bands on trading common stock and market indices. Once again, research. It's pretty interesting. They do the same thing that everybody does before, which is trade against different indexes. But they try to look at one standard reaction, two standard reactions, and so forth, and see when it actually worked well and when it didn't. I think 23 was the page where they gave their basic results. It's a technical analysis tool indicating trend reversal with a measure of relative price. That's why I say regression to the mean, both up and down. Two derivative tools calculating the data exponential weighted average. I use the simple moving average. Constructing upper and lower bands with different parameters. They can provide considerable return above the overall stock market performance in Hong Kong, but more of a push between America and Japan. The short-term retracement fluctuation, they use 60 days. for a shorter time period and 120 days for the longer time period. I still believe probably if they had done 30 days and used relative strength, even with indexes, they probably would have done pretty well. So anyway, that's what research says about it. That is my biased opinion on that. So play with the number of days. We've said that before. Ultimately helps to find good companies first. We're going to have a whole big old section on fundamental analysis and how I go about trying to find companies that are good. And then there will be an entire world on that coming soon. Relative strength, though, is coming, as are a couple of other smaller technical analysis ones out there. So that's what's coming next. Anyway, thanks for listening, and send those emails. Let me know if you have any suggestions. Have a great day. Bye-bye.